Hey, what's going on, guys? Welcome back to the channel. In today's video, what we're going to be talking about is my dividend income from my $17,000 portfolio. We're going to be talking about how many paychecks I received in the month of February, going into all the details, answer all the questions you guys might have, and without further ado, let's jump right in. All right, listen, if you guys are brand new to the channel, you're coming here for the first time, well, my name is Dalton, this is dlitztv, and on this channel, we talk about all things investing. And I'm really eager and excited to be talking more about dividend investing. Obviously, you guys know if you've been to this channel before, it is my very favorite form of investing. And the way that I choose to invest, I'm really kind of a logical investor. I go after companies that have a proven track record, companies that I see a lot of future growth in, and I don't really take these big risks with my money. I know a lot of people, when they're younger, they want to do this stuff, but for me, it has not worked out. And this is where I've seen the best returns. And what I'm trying to do is just get my dividend snowball just compounding and growing and growing and growing. And you know, that is the best thing that you can do when it comes to dividend investments. So let's just jump right into the portfolio. As you guys may know, I use a number of different investment platforms. Robinhood was what I started off on. I started shifting more and more investments over to webull investing. If you guys didn't know, you can jump in the description, get yourself 2 free stocks for signing up. And then I also use M1 Finance for my growth portfolio. But right now we're in the Robinhood app. You can see over the past day, we're up $392. Over the past week, we were able to capitalize, pick up some shares down in this dip here, and it bounced back pretty quick. And then we're up $36. So over the past month, we are seeing a slight dip of 1.22%. I know a lot of people see red, they get a little bit worried, but for me, that just means discounted stocks, buying in at better prices, and being able to capitalize more in the future, because this isn't a short-term portfolio by any means. This is for the long term. This is like retirement level. This is, you know, what I'm trying to build out over the entirety of my life. And then over the past 3 months, we're up $843, up 5%, and the past year up 13.66%, $2,000. This is all great stuff. Now, one thing that's cool is you can look back at my very first investments on my YouTube channel, figure out exactly how this portfolio came to be and how it's got to the point where it's at today. But again, this video is focusing more on those dividend payments, so let's get into the dividends right now. So as the title suggests, there were 7 different dividend payments that I received. The first one came from JP Morgan. I have 1 share of JP Morgan. It paid me 90 cents per share, so just 90 cents for this one. It's one of my lower ones. But the reason why I wanted to highlight JP Morgan is because I really truly believed that financials is going to be one of the best performing sectors for all of 2021. And when I talked about that, I was like pretty transparent with my thinking behind it, why I was investing in JP Morgan, and the returns on it came a lot quicker than I expected. I thought I would be able to put more and more money in as the price went up, but it was a pretty rapid increase. And right now we're up 24% on JP Morgan alone. So I'd love to be able to put more money into JP Morgan. We're going to see what happens to the price in the short term. I've just found better value in other companies to put my money into for the time being. But JP Morgan is definitely a really solid financial company right now to be considering. Now, if I go back into the dividend history, the next one I want to touch upon is AT&T. What's interesting about AT&T is I bought a lot of shares after the ex-dividend date, so I wasn't actually paid this month, but the next time they pay, the next quarter that they pay, I'll be capitalizing on a lot higher of a payment from AT&T. So right now, 33 shares of AT&T, 52 cents per share. I was able to capitalize on $17.37. Now, if you go into AT&T right now and you scroll down, I have 75 shares currently. I'm trying to get this number up to 100 so I can start doing some covered calls, some option strategies, and slowly introduce that to my channel, because there are ways that you can trade options that's very safe, almost guaranteed money. And I really want to highlight this so other people can take advantage of it as well. So stay tuned for those videos that are coming out. But again, with AT&T, what I really love about this is now every time I'm paid a dividend from AT&T, what happens is I just reinvest that dividend payment. And so in the future, it's just going to continue growing and growing and growing. And that's the snowball, the compound effect that everyone talks about. So right now I'm down around $96.30 on AT&T. This one is more risky. A lot of people don't like where it's headed. I mean, look at the 5-year chart, not very promising, but in my mind, there's a lot going on. HBO subscriptions are on the rise. There's so much that they have in potential. They've got a lot of physical locations. They can close down if they need to and start shifting to more traditional traditional like online style stuff. We'll see what happens with their management, but look at over the past year, it's been relatively stable around that $28, $29, $30 range. And the best part is you're able to capitalize if you're just holding on a 7.46% gain from a dividend alone. So you might look at it, you're like, you're not really seeing the highest returns from it, but you got to keep in mind that dividend is pretty stable. It doesn't seem to be going anywhere anytime soon. And AT&T, for that reason, is one of my favorite dividend investments right now. The next one I want to talk about is Apple. Apple, I don't have too many shares on. I'm sitting around 5.7 shares, 20 cents per share. So I made $1.17. This is another one that I would love to do the same thing. I'd love to get up to 100 shares of Apple. Looking at them, I don't have that much and I'm up 20% on them, but Apple's a long-term player that I think is still, you know, a pretty solid investment. Obviously, guys, when you're investing, make sure you're doing your own research. Don't just blindly copy someone on the internet. I am not a financial advisor. Do your own research, guys. It's going to, you just got to take your investments very seriously. Now, somebody asked on one of my recent videos, they looked at Apple, and in one of those videos, the price was above $300-400, and they're like, hey, I don't remember a time where Apple's stock price was ever above that. Like, what's going on? That makes no sense. And even if you look at the 5-year chart, you can tell, wow, Apple's never been up that high. So you might see those older videos and you might be wondering, why was their stock so high and now it's only $126? Well, if you look at these other companies, you know, like Amazon that have, you know, high market caps as well, you'd be wondering, why isn't Apple a part of that? Why aren't they having this like thousands of dollars in share price? And the reason why is because Apple actually went through stock splits. And if you don't know how stock splits work, essentially, if you hold one share, then the company could split it into a number of different shares. So let's say there's a 4-for-1. Basically, that one share that you own could split up into 4 different shares. And what happens is the price typically will get cut by that same number that it's split. So the price was higher, splits by 4, the price is divided by 4. That's what you're looking at. That's why the price might not reflect, you know, you look at it, just know that the number of shares outstanding is likely higher in something like Apple. Now, the next payment is quite literally from the dividend company, the monthly dividend company, Realty Income, one of my very favorites. I have 29.45 shares. They hit me with 23 cents every single month. So $6.91 every month alone from Realty Income. If I view them, Realty Income is a REIT. If you guys didn't know, REITs are required to pay 90% of their profits back to shareholders. So that's very solid. Realty Income is definitely one of my favorite. They invest in these physical locations for companies that really still need physical locations no matter what's going on in the market. And they have a lot of long-term leases that are structured out that, you know, companies can't really break easily. So for the future, it's looking pretty solid. And you can still, you know, looking at the 5-year trend, obviously, most companies have this dip here from that COVID market, and they're on the way to recover. And I think there's a lot of potential for Realty Income. And a lot of you guys are along with me in that. If you're investing in Realty Income, you see the value in it too. So let's go back here, go back to those dividend payments. AbbVie is another one that I received. I got 5.37 shares, $1.30 per share, coming in at $6.99. If I go view AbbVie, looking at them, I'm up 8.5%. AbbVie is one of the plays that I had with the COVID market going on, right? I have a few different pharmaceuticals. I have AbbVie and I have Pfizer right now. And it's no secret, like, you know, Pfizer, I even have J&J. So all of these companies have like vaccines that are helping fight against the coronavirus. So there's a lot going on that front, and there's a lot of potential for pharmaceutical companies as well. That was one of the main reasons why I had invested in AbbVie. Obviously, there's other research done too, but that's AbbVie for you. So going back out here, we also have PSEC. Now, PSEC is one that I just got some referrals from. It's basically, if you signed up for Robinhood and I get a kickback of it, it went into PSEC. I got some free stocks. So you can see my total return is $29. I didn't invest anything in it. I'm just holding these 4 shares and seeing what happens. I mean, it's a monthly dividend paying company as well, and I believe it is also a REIT. I don't have a ton of information on PSEC. I know a lot of people do invest in it pretty heavily. They have a high dividend yield. It's at 9.88% right now. You don't want to fall for a dividend trap. Make sure you know what this company is doing. I got to do some more research into them. Honestly, I didn't even know that I was holding 4 shares right now, so I'm going to probably drill into that a little bit after this video, find out some more stuff on PSEC. And then again, I have SPHD. This is one you guys have likely seen in my other videos. SPHD pays a dividend every single month. It's a really, really stable, safe ETF. If you look at the chart on it, it's a very steady increase when it is increasing. And then obviously we had this COVID dip. So if you're buying more down here, it's pretty, likely that it's going to recover back up to some of this range as you're seeing this big dip from COVID. So what I did was capitalize on that. I picked up more and more shares. My average price was pretty high before, but I was able to drill it down by investing smart over that period of time. So right now, looking at it, I'm up 11.66%, and that's not including those dividends that I'm being paid. So again, reinvest those, snowball grows bigger, making more money. It's all, it's a win-win for me. So that's everything right there with SPHD, and I love to see that. All right, so real quickly, as a holistic standpoint to this portfolio, this is the Track Your Dividends website. Links are in the description, but this is an overview of all of the dividend investments that I hold right now. Now, a lot of you guys know that I have some funds being moved, and this is what it looks like for all my investments. So $17,000 in purely dividend companies, not Tesla, none of my growth companies. This is just dividend centric with a dividend yield of 4.02%. So that's been climbing and it's looking pretty solid right now. The annual income from this so far is $684. We're on the race to get 1K in annual income. Right now I have these sorted by which ones produced the most amount of annual income, and no surprise here, AT&T at the top. What I want to go into here is the upcoming dividends, show you what it looks like for my dividend portfolio, just so you get a sense of what to expect over the next few months, because I believe the next month it's going to dip. It's not going to be as high as this month, but then following that, we're really going to start ramping it up, and I'm focusing on building out this dividend portfolio more and more. And this just shows exactly how that's going to happen. So next month, again, it's only going to be $10, but after that, up to $65, up to $82 after that. And again, it dips. But what you're going to notice is that as I'm continuing to build this, each one of these is going to grow over time, and it's going to get so much higher, and the compound effect is going to take over. All right, guys, so that's all I got for you in this video here today. I do really appreciate you checking it out. If you took anything away from it, please hit that like button. It would mean a lot to me. It helps promote my channel, get it out on other homepages, and just grow. So dividend investing is still my favorite method. I know it takes a very long time to establish, but as you can see, putting in the legwork, you can start seeing some significant progress. And where I'm reinvesting all these dividends, it's going to grow much quicker, and I'm really excited to see what the future brings. So anyways, guys, thanks for checking out the video, and have a great day.